4.2. $4.2 is now based on fixed assets. Fixed assets in the business, we have 3 fixed assets, that is land and buildings, our vehicles, and equipments. So the following information, that is 4.2 on page 13, the following information relates to the fixed or tangible assets of Justin Footwear Pty Ltd, and the financial year end is 28 February 2021. The financial year end. So if the financial year end is 28 February 2021, it means the beginning of the financial year is 1st March 2020. 1st March 2020 to 28 February 21. 1st March 2020 to 28 February 21. That's the financial year end. The following information relates to fixed or tangible assets of Justin. List 3 points for good internal control over movable fixed assets. 3 points for good internal control. 4.2.1. We need to think of 3 points for good internal control over fixed asset. How can we ensure that our fixed assets in the business are well controlled? Make sure that the fixed assets register, must be up to date. That's the first important thing for the fixed assets. Make sure that your fixed asset register is up to date. All assets that you have purchased must be recorded. There is a document which is called fixed asset register, and it must be up to date. Each and every asset that is bought, it must be recorded there, so that we make sure that we have proper records. And the second point might be conduct physical counts. We need to conduct physical counts. Conduct physical counts of fixed assets regularly. Conduct physical counts of fixed assets regularly. Make sure that the physical counts are conducted regularly to ensure that all the fixed assets are still there, because you might be having the records in the documents but only to find that there are some assets that are missing. So you need to sometimes do a physical count, check the records against the physical count of the fixed assets, so that you are ensured that all assets are still there. And then maybe the third point for good maintenance, you would service and maintenance. Service and maintenance of fixed asset must be up to standard. Service and maintenance of fixed asset must be up to standard. We need to make sure that our fixed assets are serviced and they are maintained, they are well maintained, so that we make sure, because the question here is asking us to list 3 points for good internal control over the most valuable of fixed assets. We need to make sure that our register for the fixed assets are up to date. We conduct physical counts regularly, and we also make sure that our fixed assets are well maintained. Service and maintenance of fixed assets must be up to standard. Right, 4.2.2. 4.2.2, refer to information A and B. Calculates the cost of land and building purchased on the 31st of August 2020. Calculate the cost of land and buildings purchased on the 31st of August 2020. So information A and B. If you look at the 2021 figures for land and buildings, you have land and buildings to the value of 6,250,000. 6,250,000 minus 2020, which was 5,500,000. 5,500,000 equals to, let's check the difference between 2020 and 2021. 6,250,000 minus 5,500,000. 5,500,000 equals to 750,000. There has been an increase of 750,000, but information B is telling us that Glamour Construction provided an invoice on the 31st of August 2020 after completing the new storage facilities. The full invoice amount was paid and debited to land and building. This invoice, however, the auditors have found that repairs to the old storeroom 60,000 were included in the invoice. This has not been corrected. Okay, repairs cannot be part of the value of land and building. So if repairs are also included here, repairs of 60,000, so it means we do not have the land and building to the value of 750,000. We need to take out the repairs. Repairs cannot also be added here and be part of the value of our land and building. So this 750,000 minus the 60,000 for repairs, then that is 690,000. Our value for total, that is 690,000. 690,000. So that was the answer for this one. Calculate the cost of land and buildings purchased on the 31st of August. So the cost of land and building that was purchased is 690,000. Right. And then 4.2.3. That's page 13 of the question paper. Calculate depreciation on the vehicle for the year ended 28 February 2021. Calculate depreciation on the vehicle. Let's go to page 14. The company has only one vehicle, that is information C, and the depreciation rate is 25% per annum on cost price. We have only one vehicle, and according to information A, this vehicle, the cost price is 480,000. And if the depreciation rate is 25% per annum, it will be 480,000 divided by 25 over 100. Let us calculate it. Depreciation per annum is how much on this vehicle. The cost is 480,000 multiplied by 25 over 100 equals to, depreciation per annum on this vehicle is 120,000. But it is very important to check the accumulated depreciation before we conclude that 120,000 is the correct answer. The accumulated depreciation on this vehicle already is standing at 450,000. So if the accumulated depreciation of this vehicle is already standing at 450,000, then it means the carrying value is 400, and at the beginning is 480,000 minus 450,000. So the carrying value is only 30,000 at the end of the year. This vehicle has got a carrying value of only 30,000 now. And if we are calculating depreciation at the end of the year and the amount is 120,000, therefore it means we cannot be able to use this 120,000. We can't use this 120,000 as the depreciation for the current year. A reason for that, it is because this vehicle is only left with a value of 30,000. So we cannot depreciate it more than 30,000 now, because it will end up having a negative figure. So the rule in accounting is that when a vehicle is fully depreciated, we must just leave it with at least a value of 1 rand. So it will then be 30,000 minus 1 rand. We are leaving it with a value of 1 rand. So the correct depreciation will then be 29,999. So we can only be able to depreciate this vehicle this year for only 29,999, because the reason for it is that already the value is 30,000 and we can no longer use this percentage of 25% of the cost price, because it will be giving us 120,000, and you cannot have a value that is negative. So if the value is only 30,000 left and we need to leave this vehicle with a value of R1, we can only be able to depreciate it for 29,999. So the final answer is 29,000. The vehicle for the depreciation for this vehicle is 29,999. Right. Let's go back to 4.2.4. 4.2.4. We are now 4.2.4. Let's look at the question. It says, refer to information A and D. The business depreciates equipment at 30% per annum on the diminishing balance method. On 30 November 2020, they decided to trade in a photocopy machine for a new model. Calculate the loss on the photocopy machine that was traded in on 30 November 2020. That is 6 marks. Right. Let's go to information A and D. Let's start with information D. Look at the machine that was traded in. It is said here, a photocopy machine was traded in on the 30th of November 2020 for 88,000 for a better model. The cost price of the new model that was delivered on the 1st of December 2020 was 410. The fixed asset register reflected the following: a category photocopy machine, date purchase 1st March 2019, cost price was 320,000. The cost price of this machine that was traded in is 320,000. That's the cost price, right? And then depreciation is 96,000 at the moment, and therefore the carrying value is 224,000. So but this depreciation is on 28 February 2020, and this equipment was traded in on the 30th of November. So we need to calculate the number of months again that we have used this equipment and depreciate it accordingly. So we need to bring depreciation up to date. So we still need to calculate March, April, May, June, July, August, September, October, and November. We still need to account for depreciation for 9 months. So let's calculate that depreciation on the side there. It will be 224,000, because we are using the carrying value method, which is the diminishing balance method. If we are using the diminishing balance method, we calculate depreciation using the carrying value and not the cost price. So the carrying value is 224,000 multiplied by 30% multiplied by 9/12. That's March, April, May, June, July, August, September, October, November. Multiply by. Let's calculate depreciation. So it will be 224,000 multiplied by 30% multiplied by 9/12. That is 50,400. The depreciation for 9 months is 50,400. So depreciation for 9 months is 50,400, and if you adding it to the depreciation at the beginning, which was 96,000, this depreciation, the accumulated depreciation, which is 96,000, plus that 96,000, we want to calculate the total depreciation for this vehicle. 50,400 plus 96,000 equals to 146,400. 146,400. That's the total correct depreciation. This was the depreciation that was given, which is 96,000, and this is depreciation 50,400 for 9 months that we have used this vehicle. So the correct depreciation now, which is up to date, is 146,400, and therefore the carrying value for this asset at the date of sale is 320,000 minus 146,400. The carrying value is 173,600. 320,000 minus 146,400. The cost price is 320,000. The accumulated depreciation for this equipment is 146. So if we are selling this equipment, it is supposed to be sold for 173,600. And we are told here that this equipment was traded in for 88,000. This equipment was traded in for 88,000 instead of 173,600. So minus 88,000. So let's the loss. This was supposed to have been traded in for 173,600, but it was traded in for 88,000. So loss is 85,600. So we have 85,600, which is loss. This is the loss that we were required to calculate. We were told to calculate. The instruction was to calculate the loss on the photocopy machine that was traded in on the 30th of November 2020. This machine was not traded in at carrying value. It was supposed to have been traded in for 173,600, but they only gave us 88,000. So therefore there is a loss of 85,600. So there's a loss of 85,600. Right? Calculate depreciation on the new photocopy machine and on the remaining old equipment for the year ended 28 February 2021. We need to calculate. So this was, let's take this as A, 4.2.4A, that's B. Let's calculate on the new machine now. The new machine that was purchased was 410,000. 1st December. It was delivered on the 1st of December 2020, and the new one is, the cost is 410,000. This one is new. It does not have any depreciation. Therefore, we just multiply it by a percentage, which is 30%, and we calculate the number of months. If we received it on the 1st of December 2020 and our year ends on 28 February 2021, so it will be December, January, and February. That's 3 months. 410,000 multiplied by 30% multiplied by 3 over 12. We will get depreciation for this one. Depreciation for this one. So it will be 410,000, this new machine, multiplied by 30%. This new machine doesn't have any accumulated depreciation. Multiplied by 30%, multiplied by 3 over 12. 30,750. 30,750. Let me check. 410,000. Make sure this is correct. Multiplied by 30%. Multiplied by 3 over 12. Yeah, that's. Multiplied by 30%. Multiplied by 3 over 12. Yeah, that's 30,750. That's the correct amount. Now, the instruction said we need to calculate depreciation on the new photocopy machine and the remaining old equipment for the year ended 28 February 2021. So the remaining one now. The remaining old equipments. Then let us go to the equipments. Now we want to calculate depreciation for the remaining equipments. Right? The cost price for the equipments in November 2021, the equipment is 2,190,000. Okay, this equipment was traded in on the 30th of November 2020 for 88,000 for a better model. The cost price of the new model was delivered on the 1st of December 2020 was 400. The fixed asset register reflected the following. Let's check if this is okay. So now we have this 2,190,000. 2,190,000. That's the cost of equipments. in 2021. It is 2,190,000. That's 2,190,000. And let's subtract the cost price of the equipment that was sold, which is 320,000. Right. 2,190,000 minus 320,000. 1,870,000. Let me start afresh. 2,190,000 minus 320,000. That's the remaining cost will be 1,870,000. 1,870,000. And then the accumulated depreciation, it's 1,440,000. 1,440,000. Let's take out the 96,000 for the asset that was sold. 1,440,000. 1,440,000 minus the 96,000. Depreciation of the asset that was sold. That is 1,344,000. Right, we are calculating this depreciation using the diminishing balance method. Equipments, they are depreciated at 30% using the diminishing balance method, right? So 1,870,000, 1,870,000 minus 1,344,000 minus 1,344,000 equal to 526,000. 526,000, you multiply this by 30% because this is the carrying value. 526,000 multiplied by 30%. 157,800. That's the final answer. Depreciation on the remaining equipment is 157,800. We have started by taking out the asset that was sold so that we can be able to calculate the depreciation on the remaining equipment. So the total amount is 157,800. Right. And then the last question is 4.2.5. The last question, which is 4.2.5, it says the CEO feels that the land and buildings are worth at least 10 million and wants to adjust the figure in the statement of financial position or balance sheet accordingly. Explain why the auditor does not agree. It's clear. Even if you feel that it's now worth 10 million, but it's not allowed in accounting. There is a GAAP principle, which is historical cost. Historical cost. Assets must be recorded at its original cost price. This is the principle. The principle is called historical cost. Historical cost. Assets must be recorded at its original, even though you know that the value of the assets like land and building, they appreciate, but it is not allowed in accounting to assume that no, the value of this land and building has increased, so it is now worth 10,000 and then you record it at 10,000. So the historical cost rule, it says assets must be recorded at its original cost price. So this 4.2.5 brings us to an end of question 4, which was based on inventories and fixed assets. And this question is coming from the November 2021 exam. We have done question 1, question 2, question 3, and now we are finished with question 4. So it means the following paper that we shall be dealing with is still the same paper, which is November 2021, but it will then be November paper 1. It will be paper 1 now. We started with paper 2 and we are going to end with paper 1. Thank you very much.